The Dow Jones Industrial average falling 725 points today. I'm here now with billionaire investor Ken Fisher, chairman of Fisher Investments. Ken, what a day. How much of this was related to trade worries?
Yeah, I think today was like a perfect storm. Sometimes you get a tornado, sometimes you get a snowstorm, sometimes you get both and an earthquake all at the same time. And today you got that, where the magnitude of the damage was confused with the size of what would have tariffs imposed on it. Secondarily, had disappointing PMI numbers. Thirdly, had the whole Facebook thing from last night, which is much discussed today. And finally, Jeff Zucker says that Fox News is just simply state-run TV. And then I interviewed Jim Cramer on the impact of fake news on the market. How much bad news and bad stuff can you get in one day? So the reality is, it's a day and people get too excited. This is all part of the process of trying to work our way through the correction that started late in January and is just part of volatility. Shouldn't be taken too seriously.
Well, this was the worst day for the market since February 8th. The S&P 500 down 2.5%.
And that's good.
Do we retest 2581?
I don't know about that exactly. If you ask me where the market's going to be in a week, 3 weeks, or 45 days, I never know. But fundamentally, this process is good. And you should look past the short term, because short-term traders usually get whacked, and look toward the longer term. And when you get all this behind us, there's still positive ahead.
And you say it's good in the sense that people can get in and buy stocks at a discount.
And the freak-out factor is a good thing. Freak-out factor is almost always a good thing.
In terms of sectors, where are you looking? Because financials were the worst performing sector today in the S&P 500.
But the things that have been doing the worst on the downside will do the best as you move past this point, which will include it'll include big tech. We'll get past all this because fundamentally, when you get right down to it, all those things that are getting whacked associated with the Facebook news and the threats of regulation to Google, et cetera, all that stuff is really fat gross margin with growth rate and is in a really controlling position, and the market will reward that.
What about the Federal Reserve? I mean, how much of this?
Overplayed. The fact of the matter is that I'm always a Fed critic. I mean, I generally think the Fed almost always gets it wrong.
Did you like Powell's press conference?
I've never liked anything about any Fed head pretty much ever. As I said, I'm almost always a Fed critic. But the fact is, markets are global for money, and global quantity of money is doing okay. Globally, we have less long-term interest rate pressure than people anticipate because a flattening of the yield curve reduces future loan growth. The banking system, of course, grows the quantity of money by increasing net outstanding loans, and there's less incentive to do that when you flatten the yield curve. So therefore you get less future inflation. The inflation premium on bonds in the future is less than it would be otherwise. Everybody's betting on rates to go up a lot. It's hard to do as you flatten the yield curve some. So fundamentally, particularly in Europe where loan growth is pretty good, it's an okay world.
All right, Ken Fisher, we'll leave it there. We always appreciate your advice.
Great to be with you always.
All right, what a day on Wall Street. Stay with the street for more coverage.